What if I told you that mastering just 5 fundamental indicators could change the way you trade major Forex pairs forever? In the world of Forex, technical analysis gets a lot of attention, but ignoring fundamental indicators is like flying blind through a storm. Today on FX Limit, we're diving into the top 5 fundamental indicators every trader needs to understand to make informed, confident trades. Let's kick things off with number 1, interest rates. Central banks drive the market, whether it's the Federal Reserve, ECB, or the Bank of Japan when they raise or cut interest rates, the entire Forex market reacts. A rate hike typically strengthens the currency, while a cut weakens it. Keep an eye on those monetary policy statements and central bank meetings. Traders who get ahead of these announcements often find themselves in winning trades. Next up, number 2, gross domestic product, or GDP. This is the broadest measure of economic activity. A strong GDP number usually indicates a healthy economy and can lead to a stronger currency. But it's not just the raw number market expectations matter. If the consensus was expecting 2.5% growth and it comes in at 2.6%, that's bullish. If it drops to 1.8%, expect volatility. Coming in at number 3, employment data, particularly the non-farm payrolls in the US. This is released monthly and is notorious for causing huge price swings. A strong jobs report can indicate inflation is coming, which may trigger rate hikes, and again, that's bullish for the currency. But the devil is in the details. Look at wage growth and labor force participation too. Our 4th must-watch indicator, inflation rates, especially the Consumer Price Index, or CPI. Central banks use inflation to guide their policies. If inflation is too high, they might raise rates, which can drive the currency higher. Low inflation might push them to stimulate the economy, weakening the currency. Learning how to read inflation data in relation to central bank targets gives you a serious edge. And finally, number 5, trade balances. This shows the difference between a country's exports and imports. A surplus means more demand for the currency to buy those exports, good for the currency. A deficit can signal weakness, but don't just watch the number. Understand which sectors are driving the imbalance. Energy, tech, agriculture, they all impact different currencies in unique ways. Now, here's the real trick, combining this fundamental awareness with the right tools. That's where the Apex Trend Indicator comes in. Imagine getting a clear, visual confirmation of trend direction after a major fundamental release. Say the Fed hikes rates and the USD starts surging. The Apex Trend Indicator instantly shows you a trend reversal with an arrow and updates your dashboard with take profits and stop loss levels, all without repainting. It even alerts you directly to your phone or desktop, so you never miss a setup. What makes it even better is that it supports multiple pairs and time frames, giving you a bird's eye view of the entire market. So while you're monitoring fundamental indicators like CPI or NFP, Apex is scanning for actionable entries. It's like having a personal analyst whispering, "The trend has just shifted. Here's your chance." Traders often ask, should I choose fundamentals or technicals? The truth is, you don't have to pick sides. Smart traders use both. When a fundamental release confirms the technical trend or vice versa, that's your green light. So as you track interest rates, GDP, employment, inflation, and trade balances, think of the Apex Trend Indicator as your confirmation partner. It bridges the gap between theory and execution. That's the kind of synergy that makes trades smarter, more accurate, and ultimately more profitable. If you're ready to blend powerful market insights with cutting-edge trend detection, visit fxlimit.com and check out the Apex Trend Indicator. The market doesn't wait, neither should you. Thanks for watching FX Limit. If you found this helpful, hit that like button, subscribe for more trading strategies, and let us know in the comments what's your go-to indicator when trading major pairs.